So KG is the new year. My new year resolution is to buy a house. What are the home loan products available for buyers? I'm glad you asked. We'll talk about that in a minute. Hey there, this is KG. I'm a realtor with Fairfax Realty in Rimfield, where we help buyers to buy their dream home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, move, invest in real estate, contact us below. We'll take care of you. And don't forget to subscribe to the channel to get updates once we upload a new video. All right, so it's a new year, new resolution, new things to do. You want to build equity, you want to stop being tenants, now you want to be a homeowner, or you want to upgrade, or you want to downsize, or you want to refinance, whatever you want to do. What are the home loan available for buyers? We're going to discuss 5 home loans that are available for buyers. And I don't care what your situation is, you fall into any of these home loans that you can buy, refinance, upgrade, downgrade. So let's go. Five types of home loan available for home buyers. The first one is FHA loan. FHA loan is a type of government-backed mortgage loan. No, listen, I did not say government issued, I said government backed and insured loan. Government does not give loan, right? Uncle Sam does not give you mortgage loan, but they backed loan. So lenders can lend because they have the power and the strength of Uncle Sam right behind them. And so FHA loan allow people with not so good credits and have some issues with their debt to income ratio to buy a house without putting 20% down. And then people that file bankruptcy or other financial mark like foreclosures or short sale on their credit after a certain period of time, they can buy quicker than if they want to buy using other mortgage type. So what are the requirements? Well, for your credits, has to be 580 or more. 580 credit score is the requirement for FHA loan. Some lenders can go little tiny down, but generally most of them do 580. Minimum down payment is 3.5% down. Like your down payment has to be 3.5% down. That is the minimum that you can do with FHA loan. The maximum loan amount, the maximum house that you can buy, the loan amounts that you can get with FHA loan is 800,000, 822,375. This was just changed late 2021. So this is a lot of a house, right? Depending on where you're living. If you're in the DMV, it's a lot. If you're in California, go help you. So with FHA, you pay what we call upfront mortgage insurance premium. Upfront, that means it's paid at closing. It's 1.75% of the loan amount. 1.75% of the loan amount. So if your loan is 500,000, 1.75% of that, you pay it as part of your closing in addition to your down payment at closing. Then every month when you make your mortgage payment, you're still going to be paying mortgage insurance, right? So the downside with FHA loan is because you didn't put 20% down, you're paying mortgage insurance. You're going to pay that mortgage insurance for the life of the loan unless you refinance. What am I talking about? So if you get a 30-year mortgage with FHA loan, your mortgage insurance, which can range depending on your loan amount from 400 to 500, depending if you're buying a $800,000 house, your monthly mortgage insurance is going to be big, right? You can pay that for the life of the loan. If you don't do anything, just pay that every month. The only way to get out of that is to refinance into a conventional loan. But when you get FHA, when you keep it for the life of the loan, there's no going out of that mortgage insurance. Notice that. The second one, mortgage loan, is conventional loan. The conventional loan is not guaranteed or insured by the federal government. No. These are people on Wall Street that want to make you those loans, right? These are banks, commercial banks that want to make money. They want to make money. So they want to make sure you can buy this house by your credit and your debt to income ratio. So most conventional loans are going to be what we call conforming loans. What that simply means that once they make those loans, they're going to sell those loans to Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are government, quasi-government agency. But what you should know is neither of them, Fannie Mae or Freddie Mac, they don't make loans directly to home buyer, but banks, commercial banks, or mortgage lenders make those loans. And once they make those loans, to free up their money, they sell those loans to Fannie Mae and Freddie Mac, and now they can make more loans like conventional. So what is the requirement? Minimum credit score, because this is a conventional loan, and listen, people on the Wall Street, they want to make money, so their credit score, their financial requirement is stricter than FHA loan. Minimum credit score is 620. The debt to income ratio is way stricter than FHA loan. Now the down payment is 3%. You can really get a down payment of 3% with FHA, with conventional loan. And you do have mortgage insurance, just like you have mortgage insurance with FHA, you have mortgage insurance with conventional loan if you don't put 20% down. But the difference is with conventional loan, once you are able to get up to 20%, like you have equity, that means your house appreciated 20%, or you pay up that you now pay, paying down that you now have 20% of the house. Now you can ask the mortgage company to remove the mortgage insurance. Of course, they're not just going to take it out, right? They will do what we call appraisal to make sure it is true that you have this 20%, and then they take it out. That is a chunk of money that you can save. So if you have the credit and the means, you should check out conventional loan. Next one is USDA loan. This is a mortgage that is also backed by the federal government, but Department of Agriculture, USDA back USDA loan, right? USDA back USDA loan, yeah. So it's actually made for people that lives in rural area, they are low income, don't let that for you, in designated rural area. So we are in the DMV area, and you're saying there's no rural area in the DMV. Yes, there is. There is rural area in the DMV. We have rural areas in the DMV area. So to find out if where you want to buy, the address is considered a rural area, you can go to USDA loan website and put that address. It will tell you if it's a rural area. Yeah, the rural area. So what are the requirements? The minimum credit score is 640. The minimum down payment is 0. There's no down payment for USDA loan yet. And they have what we call guarantee fee upfront, 1%. It's actually lower now. It was higher than that before. So 1% of the loan amount, you have to pay that at closing. But hey, it's 0 down payment. It also have mortgage insurance, which is going to carry you throughout the life of the loan. Just like FHA, you can get out of it unless you refinance. Government backed. The last, not the last, this is the fourth one. It's called VA loans. This is also insured and backed by Department of Veterans Affairs. VA loan. Of course, as the name denotes, VA is for veterans, people in the armed forces and National Guard. They're discharged, of course, honorable discharge, or their spouses or still active duty. They should definitely look at this loan before they look at any other loan, because the VA loan always have lower interest rate than other loans. This is for VA. So what are the requirements? Generally, the VA does not require any credit score, really. But the lenders that are going to do the loan require credit score. The minimum credit score is 580. The minimum down payment, 0. VA loan is 0 down. VA funding fee, this is a fee that has to be paid at closing, ranges from 2.3 to 3.6, and this actually You know why the range? It depends if this is your first VA or if you have another VA. It kind of depends. There's so many variables, but this is the fee. You have to pay VA funding fee, and they add it to the loan. Of course, you know this is government backed, government insured. There's also mortgage insurance. What can I tell you? It's government backed. The last but not the least, are what we call the state and local government programs. Most states have home loan program for first-time home buyer, for move-up buyers, or refinance, different program every state. We are in the DMV area. Maryland has Maryland mortgage program. Virginia has Virginia home loan program. DC have DC home loan program. So, and some of them, their requirement is actually tailored towards FHA or conventional loan. And most will allow buyers to buy a house with no down payment, zero. So, depending on what your situation, on where you want to be, you can definitely look at any of this program for the state and local government to see which one you can qualify for. But these are the 5 types of home loan program available for home buyers. Remember, this is not just for first-time home buyer or for down buyers that are downsizing. It's for all buyers, and it's not just to make a purchase. Even when you want to refinance, you can use any of this loan. So, happy shopping. Don't forget, if you're looking to buy, sell, move, invest in real estate, contact me below. We'll take care of you. And don't forget to subscribe to the channel to get updates once we upload a new video. Ciao.